Apple, the tech giant, recently experienced a significant setback. Its stock plummeted, losing a staggering $174 billion in market value in a single day. This drop, the sharpest since 2022, sent shockwaves through the market. Investors were left wondering, what caused this sudden decline? Was this a temporary blip or a sign of deeper troubles for the tech giant? This dramatic drop, while concerning, is not entirely out of character for the volatile stock market. Apple, despite its size and influence, is not immune to market forces. To understand this decline, we need to look beyond the immediate headlines. Both internal and external factors have contributed to Apple's recent stumble. It's crucial to remember that a single day's trading doesn't define a company's future. Apple's story is far from over. To understand the significance of this drop and what it means for potential investors, we need to look into the contributing factors. This analysis will examine the broader market trends, Apple's recent performance, and expert opinions to provide a clearer picture of the situation. By understanding the reasons behind this decline, investors can make more informed decisions about their portfolios. Apple's stock plunge didn't happen in isolation. It coincided with a broader downturn in the U.S. stock market, a trend affecting even the mighty Magnificent Seven tech giants. This market-wide dip was fueled by a mix of anxieties, including concerns about President Trump's renewed trade tensions and their potential impact on the global economy. The Dow Jones, S&P 500, and NASDAQ all felt the heat, mirroring a global trend of market uncertainty. Trade wars and tariff threats tend to spook investors, creating volatility and prompting a flight to safer assets. This risk-averse sentiment undoubtedly played a role in Apple's decline, dragging down even the most robust stocks. Adding to the market jitters were concerns about rising inflation and the Federal Reserve's response. The specter of interest rate hikes can dampen investor enthusiasm, particularly in sectors like tech that rely heavily on future growth prospects. Apple, despite its strong fundamentals, couldn't escape this broader market correction. While external factors undoubtedly played a role, it's crucial to examine Apple's internal dynamics to understand the full picture. The company faces its own set of challenges, which, when coupled with the market downturn, created a perfect storm for this recent stock slump. While market forces exerted downward pressure, Apple's internal challenges also contributed to the stock decline. One significant concern was the company's announcement of a delay in its AI upgrades, particularly for its voice assistant Siri. Investors, accustomed to Apple's rapid innovation cycle, saw this delay as a sign of potential stagnation. The tech landscape is fiercely competitive, and any perceived slowdown can erode investor confidence. Apple, once synonymous with cutting-edge technology, faced criticism for falling behind competitors in areas like AI-powered services, smart home integration, and foldable phone designs. This innovation gap, coupled with the AI delay, fueled anxieties about Apple's future growth. Furthermore, concerns lingered about iPhone sales, a crucial revenue stream for Apple. While the iPhone series launch generated initial excitement, some analysts expressed concerns about slowing growth, particularly in key markets like China. The smartphone market is approaching saturation, and even Apple's loyal customer base is not immune to upgrade fatigue. These internal challenges, combined with the broader market downturn, created a narrative of uncertainty around Apple's immediate future. Investors, seeking reassurance and clear signs of growth, reacted by selling off shares, contributing to the stock's sharp decline. So, let's dive into the current ratings and what we can expect in terms of a rebound. Analysts have mixed feelings right now, but many are leaning towards a positive outlook. If we look at the ratings, we can see a trend that suggests a potential rebound. It's important to remember that these ratings are based on a variety of factors, including market conditions and company performance. Now, looking at the long-term outlook, analysts predict that Apple will continue to be a strong player in the tech industry. Over the next 5 to 10 years, we can expect to see steady growth. Predictions are often based on Apple's history of innovation and its ability to adapt to changing market conditions. So, while there may be short-term fluctuations, the long-term view remains optimistic. Speaking of history, let's talk about Apple's resilience. Over the years, Apple has faced numerous challenges, but has always managed to bounce back. Whether it's been economic downturns or fierce competition, Apple has shown an incredible ability to not only survive, but thrive. This history of resilience is one of the reasons why many investors remain confident in the stock. So, why might this be a buying opportunity? Well, considering the current ratings, the long-term outlook, and Apple's history of resilience, now could be a good time to invest. Many analysts believe that the stock is currently undervalued, presenting a potential buying opportunity for savvy investors. Of course, it's always important to do your own research and consider your financial situation before making any investment decisions. Remember to leave a like and also subscribe for more videos like this.